you've got to think of crypto as the most ludicrous market you've ever been involved in. It has the highest returns, the highest volatility, the biggest drawdowns, the best memes, the most stupidity, the most angry people who hate you because you're involved. It's like everything in the world turned up to 11. So it's the most befitting thing in the world where everyone gets super excited about new all-time high in Bitcoin. It prints the new all-time high, does a massive reversal, and everyone's like, oh, we're poor again now, And it's kind of like the other thing about crypto, unlike traditional markets, it's so easy for regular people to have leverage. Mm-hmm. So for some reason, even though you warn people and tell people and beg people not to take leverage in a 70 vol asset, they still do it. And so what happens is, it might even be just a small position, but it builds up because they all get confidence. Then something happens, and it's like, you get liquidated, you all get liquidated. We cleared out, I don't know, it was $1.5 billion of liquidations in Bitcoin in like half an hour. Market resets, and off we go again. So it's kind of, you have to think of it as a computer game. It's so ridiculous. But, as you know, I don't trade any of this stuff. I mean, I was buying all of my crypto back in November, December 2022. I don't think I've bought anything since January 2023, and I've just done a few asset allocation shifts. The idea is just to own your spot, own it for the cycle, and just do nothing. And it's really as simple as that. You get paid to do nothing. I mean, watch this stuff. Solana was up 10x last year.
Don't forget to subscribe, crypto traders. Let's continue with the interview and the analysis of this one.
Bitcoin has carved a niche in the financial world marked by its volatile nature and the myriad opportunities it presents to investors. One of the defining features of the crypto landscape is its capacity to generate significant returns for investors in relatively short timeframes. The allure of quick profits has drawn countless individuals to the crypto market, enticed by the promise of exponential growth. However, this potential for high returns comes hand in hand with extreme volatility, a hallmark of the cryptocurrency space. Unlike traditional financial markets, where leverage is often restricted to institutional players, the crypto market has democratized access to leverage. Regular individuals can easily amplify their trading positions using leverage, thereby magnifying both potential gains and losses. This accessibility to leverage has transformed the dynamics of cryptocurrency trading, enabling individuals to take on larger positions with relatively modest capital. However, it also exposes traders to heightened risk, particularly during periods of market turbulence. The rapid price swings characteristic of the crypto market can trigger margin calls and liquidations, wiping out entire trading accounts in a matter of moments. Amidst this backdrop of volatility and risk, a compelling investment strategy emerges, one that advocates for owning assets through market cycles without engaging in active trading. This passive approach to investing allows individuals to capitalize on the long-term appreciation of Bitcoin without the need for constant monitoring or decision-making. By adopting a buy-and-hold mentality, investors can potentially realize substantial gains over time, leveraging the inherent growth trajectory of Bitcoin. The appeal of passive investing lies in its simplicity and accessibility. Unlike active trading, which demands a deep understanding of market dynamics and technical analysis, passive investing requires minimal effort and expertise. Instead of attempting to time the market or chase short-term gains, investors can embrace a more patient and disciplined approach, confident in the belief that Bitcoin's fundamental value proposition will continue to strengthen over time.
Bitcoin was up 160%. Everything's up 50% this year to date. You don't have to do anything. You don't have to do anything at all. How you got to think about it is, we're getting into price discovery phase in Bitcoin, and most of the other crypto will catch up, and we'll all get to new all-time highs in the quality assets. The shitty stuff won't do, but the quality assets go to all-time highs. You don't know how high they go. Usually it's somewhere between 3 and 10 times the previous all-time high. Okay, so even when you're at the all-time high, you've got significant upside from here. If we're not at the business cycle point where things turn lower, which tends to be later in 2025, maybe if it comes earlier, it's the end of 2024. Either way, that's when you get larger drawdowns. So you're going to see 35% liquidations, but you've probably got a worst case 100% rally from here, and the best case whatever, depending which asset you choose. So the risk reward is always good. So if you are on the sidelines, look, for most people, you hold less of an asset that's so volatile. So you own less of it. And days like today, when there's liquidation, that's a great day to put some money at work. Now, is this the low today? Who the hell knows? Could it go low the next week? I don't know. But if it does, you should think of it as a gift. For me, it's not a gift because I have no more money to put into crypto. So I just have to watch it. But that's what these are for. So you should not be scared of them. If you have a thesis and you understand and you think, okay, this market's going to go higher over time, then use sell-offs to your advantage to get slightly better entries where, it's less frothy, because it never feels good to buy something and then it goes in your face 10, 15, 20% before rallying. It's always that always leaves a bad taste in your mouth. It's always nice if you can buy something that's on sale for no real reason except people are liquidating positions because they got overexcited. That's a nice time to start adding to it.
The world of cryptocurrency is constantly evolving, marked by phases of intense price discovery and speculation. At present, Bitcoin finds itself amid such a phase. This period of price discovery signifies a time of exploration and volatility, where the market seeks to determine fair value amidst shifting dynamics. In this phase, quality assets within the cryptocurrency space are poised to explore new territories, potentially surpassing previous all-time highs. Bitcoin stands at the forefront of this journey, driven by factors such as increasing institutional interest, mainstream adoption, and evolving regulatory landscapes. However, amidst the excitement of price exploration, it's essential to acknowledge the inherent risks associated with the crypto market. Anticipated downturns in the broader business cycle can exacerbate volatility, leading to larger drawdowns in asset prices. Nevertheless, these downturns also present unique opportunities for significant market rallies, as investors seek refuge in alternative assets like Bitcoin amidst economic uncertainty. Navigating through the price discovery phase requires a nuanced understanding of market dynamics, risk management strategies, and a long-term perspective. While short-term fluctuations may test investor resolve, focusing on the underlying fundamentals and technological advancements driving the cryptocurrency ecosystem can provide a sense of direction amidst market turbulence.
But yes, from a trading perspective, different time horizon for me, great opportunities because you put in one of those big outside days, you put in a demarked top, you had a bearish divergence on the RSI. So, okay, most people are probably expecting a quick downprint and resumption, but maybe because of this structural thing, you have a down, up, down, ABC, nice, slightly longer correction, or maybe not longer in time, but sharper in price than people expect. That kind of stuff. And I think you're right, it's tradable. But then, where are we in the longer term time horizon? Well, we've probably got a lot further to go. So if you're a trader, you're like, okay, I can trade both sides of this and make money. Now, I'm a terrible trader, unlike you. So I just stick with the long-term pattern, which is bottom left, top right. It keeps doing it over the last 10 years I've been doing this. So why change that?
Bitcoin trading encompasses various perspectives and strategies that traders employ to navigate the volatile cryptocurrency market. One pivotal moment in Bitcoin's trading history occurred in 2016 when the cryptocurrency experienced a remarkable surge, propelling its value to an unprecedented $20,000. Traders keenly observe indicators such as outside days, demand tops, and RSI divergences to identify potential trading opportunities within this fluctuating landscape. Following such surges, traders often anticipate rapid downward movements in Bitcoin's price. However, the market's behavior can be unpredictable, sometimes manifesting unexpected corrections, such as ABC patterns, which can confound traders' expectations. Despite short-term fluctuations, long-term traders maintain their focus on Bitcoin's consistent upward trend over the years, recognizing its potential for sustained growth.
But from the perspective of trading, that's why a lot of people like to trade it if they don't mind volatility. It's tough. If you want to use a bit of leverage and do the kind of old school way you might trade bonds, you're just going to get carried out in this. But if you're used to commodity trading, gold actually trades like this. Not quite as volatile, but gold breaks out, fails, goes back down, then goes up. It's a pain in the arse to trade. Silver's even worse. So it's kind of similar to that. This is part of my don't f this up thesis. If you want to get involved, like it's life-changing. It's the biggest macro trend we've ever been given. It's the best performing asset in all recorded history in the shortest period of time. And it continues to be the gift that keeps on giving. Everyone writes it off every time it does a down 80%. And 18 months later, it's back at all-time highs, making everybody look like idiots. So the game is not to fuck that up. And the classic way of doing it is using leverage. Because you will lose your mind. You will do stupid things like, here is an asset class that goes up stupid amounts. And for some reason, that little voice in your head says, you know what? If I just got 5 or 10 times levered, I could make 10 times as much money. What, are you bananas? It goes up 100, 200, 300% in a year. You don't need leverage. And so just stop doing that and stop FOMOing because, today was a classic FOMO day, right? Most people would like, it's broken all-time highs. Don't do that in crypto. It will make you look stupid. And just have a plan. Stick with it. Don't use leverage. Use the right time horizon. Unless you know how to trade really well, like Tony, don't touch it in that time horizon. Just buy and hold it and forget about it. It's fine.
Yeah.